All right, this should now work. Awesome. Let me share my screen with you all. Sorry if I've been a little slow these past few days. I'm not gonna lie. It's been a rough week. It's been a tiring week, a lot of work. So might be a little bit more tired in my voice and stuff. Might be repeating myself more often, but it's awesome to see you guys coming in numbers here for these live events that we host here in the Rice Trading Discord. Just awesome to see you all in numbers once again. We had a pretty standard day, to be honest. I had the wrong idea going in, but I was able to adjust quite quickly, and we'll look at it in a second. But if we're following our mechanical logic, which is something I talk about once again quite often in these PA reviews, I feel like I say that all the time, right? But whenever we do our weekly outlooks and stuff, I always use the same logic, right? I'm looking at my most recent daily range. I'm looking at my first premium and discount arrays, right? Which in this case is not this fair value gap. I just like to showcase it, but it is this liquidity. It would be fair to say that we are going to take out this liquidity, tap into that fair value gap, and now at least have a retracement lower. Now, is this move lower or retracement or an expansion? Well, it's my last trading day of the week, so I'm going to be honest with you guys. I don't really care. I never try and predict too far in the future, right? All that I know is that this move lower had to go lower, and now, of course, we formed some equal lows, even though there's SMT at these points. Definitely going to be wary of that, but my invalidation level is this fair value gap. So as soon as we trade back into this fair value gap, I'm going to expect that our next target is going to be this high, right? So just for you guys trading tomorrow, and perhaps, well, we're going to do a weekly outlook next week anyways, but if you're trading tomorrow, definitely if we go back up here, then I'm going to be looking for longs. Anything other, I'm just going to be looking for shorts, at least to this order block right here. But enough talking about tomorrow. What about today, right? What did we do? Well, yesterday we did so. Now today, we traded above previous day high inside this daily fair value gap, quite high if I might add, right? I'm adding the volume imbalance to it, but we traded quite high into this gap. If we go down to our 15-minute, right, what are we always looking for on our 15-minute chart? And let me actually go and replay once again so our indicator lines up correctly. It's weird. It's been a few days that midnight just lines up with daily open. That's actually kind of cool. But looking at this, what are we always looking for as power of three, right? Well, we're looking for a key level that got taken out. So some key liquidity or swing point that was formed in a higher time frame and efficiency. And how do we basically add confluence that this level could now be our low of day, right? I call them low of day candidates, right? It's nothing special there. I'm just looking for something specific to happen, a manipulation. I just remembered I created a template for that, and that's at the top, and now I need one at the bottom. But you're looking for manipulation at a key time confirmed with SMT, right? Same thing I look at every single day at session open, same thing I look at specific news release. Manipulation at a specific time confirmed by SMT. Well, in this case, my specific time is London session. Now, this was just before London session, so something I should have noticed. But going into the market this morning, I was expecting this low to hold and for us to keep trading higher, right? That was the main goal as we traded so far above this gap. But if we follow our mechanical logic, you see this gap, we are within our higher time frame and efficiency. Yesterday's close respected it, right? Going back to a daily chart, we barely traded into it. And if we go back to our 15 now and we look at this, and let me actually just go back in replay mode now. I'll try not do so much back and forth. Well, this is your daily manipulation. Now, the only reason why I didn't like that so much is because there wasn't any recent SMT, right? We look at this, there is no 15-minute, there's no hourly. But once you go further to the left, then you can notice some things, right? You can notice some, well, that's not the SMT. Is it that one? Well, actually, that doesn't seem to be any in the 15-minute chart. So it's really inefficiency, right? So I'm looking at that 15-minute gap, how we did not trade into it on NASDAQ. It is this level right here. Did not trade into it, but on the S, it is this level for the same inefficiency. I believe I was looking at an hourly chart. So there is divergence, but we're looking for, right? You're really looking for it. And with hindsight, this is easy. But when you're in front of your chart, this is the harder part, right? Am I really going to look at 2 weeks ago, this inefficiency, we traded into it here and that? No. The truth is no. I'll never, well, maybe luckily today I looked at it, but truth is that is not something I can do with consistency, right? So what do I do in this case? And sorry, this is actually really bothering me. So I'm going to remove my daily, my midnight open here actually. You know what? Let's just do this, because they are at the same level pretty much, and it is literally pissing me off that I see it like this. There we go. That's a bit nicer. So once again, we don't have SMT at this high. So it was hard for me to trust that we were going to leave this high open. And if you notice the time of this high, it is 3 a.m. That is London high. That was a clear objective for me. The truth is, after a large range day, what do we want to see? A retracement, right? We expanded very aggressively with very little moves lower yesterday. So it was really fair to assume, especially coming in on a Thursday, that we would see a retracement, and our higher time frame order flow, our higher time frame inefficiencies and such backed that idea, right? We're adding additional confirmation to that idea of seeing a move lower. So even though we had a London rate framework, bias should have been lower. Now I say this because I was looking for longs when I started at 9:30 open. I switched up very quickly. It took me 2 minutes to notice, but still it was a valid look for it. But truly, the bias was short, looking for a retracement lower. And I don't necessarily name it, right? But I talk quite a bit about this, what people like to call trendline liquidity, low resistance swings, however you want to call it, right? There's no defense here. Every liquidity is near one another right up until this large fair value gap, which means what? Well, I understand that price should run right up until this low before having the need to retrace at all. And now, of course, it seems with hindsight. So I do like to note that I talk about this quite often, because if not, people just see this and they'll just see, oh, well, look, you chose the last low. But even if I'm looking at this chart before this happens, where do I expect price will go to when it retraces? Not to this low, because then it will just induce these lows. If it takes out this low, it's just going to be inducement of this low. Same thing, so on and so forth. So until it takes this out, I can't trust that a retracement is completed, right? If this move lower is a retracement indeed. Now going down to our, we start trading at 9:30, right? So going down to our 1 minute chart, you're just waiting for 9:30. Now you're expecting a Judo swing. This is something I haven't talked about yet quite a bit, but when a news doesn't form a fair value gap, any high impact news, right? And of course, in the app there, in the Rice Statistics app, for those that are not familiar, there's going to be a lot more detail than this, but I'm just going to go over it quickly. I'm looking for news rate. So we took out news highs. We took out news lows as well here, but barely. And taking those out formed equal lows. So that for me is just a clear framework to go lower for a scalp. This is what I traded today. I actually just traded this small move and got out. Now, am I salty that I didn't hold on and catch this whole move? Yes, 100%. I can't lie to you guys. But, I mean, I got my piece and got out. This was a little bit foggy to me, so I just decided to get out. But we'll look at it, right? On that 9:30 open, you don't have any clear, well, just before 9:30 open, sorry, you don't have any clear SMT. But as soon as 9:30 opens, you can see NASDAQ form a lower swing, while ES formed a higher swing compared to that same swing point, right? Let me actually just move ES. It is just being ugly right now. So from that point on, I can look to go short. Now, there was a lot of divergence just with this, and then this being higher here, forming, not forming additional SMT, but you can clearly tell that NASDAQ was a lot more bearish. It was a very aggressive open. So it was quite hard to say that, well, the move you could have caught is this. So it's quite aggressive. I don't anticipate that a lot of traders will see this, especially if you are not used to looking at breaker blocks. But when you're like me and you've only been looking at breaker blocks for the last years of your life, right? Well, almost years, a year and a half of your life, I notice these patterns. I sleep dreaming about these patterns, right? I'm just used to seeing them. So when I see this pattern form, I see it right away. and I like to plot my standard deviations on them to just show you the initial range. It's a little easier to see it. You have your breaker block, you have SMT. Now all I'm looking for is my first array, and see, just looking to the left, the closest one in price, this inversion fair value gap. And even though this first candle ran 35 handles, when this candle opens, if you guys were live on your chart, it actually barely went down and went all the way back up here, which gave you a beautiful entry. Oh, as I just said, this seems to be cherry picked, right? So we're going to look at other opportunities as well. But the truth is, the real rise model today lasted 1, 2, 3 minutes. 3 minutes for 5.59R. And I have Julian in here, which is a friend and a student as well. You know, we backtested some 3 minutes, some 6 minutes, some 7-minute trades that just gave some crazy R. It just happens, right? Julian here has like 600 and perhaps more backtests of the rise model. So he knows that these setups happen. But if just looking at it for today, it does seem cherry picked. Honestly, at this point, you would not even have had time to take profit. But if I'm looking to partial at some point, right, I'm looking at the most recent expansion range in a 5-minute chart, of course, but this is the movement that I'm focused on. And then I'm looking at the first discount in efficiency. It is this swing low, and now this line is the other liquidity. Let me just remove this. I'm looking at this swing low, which if we go look on our 1 minute, you'll see aligns beautifully with 4 standard deviations. This is my partial objective right here, which got hit right away, right? For, what was it? For 3R straight. Beautiful. And then you could have held on all the way down here to those equal lows we just discussed, right? Let me just move this aside. This is the current low of, not of day, sorry, but the current low of the, just basically the opposite move, right? I always say focus on the symmetry. This is my most recent expansion higher. If I'm looking to take a trade lower, I want to see us target this to confirm the idea, right? If it doesn't go there, then it should stop there at my partial and then reverse. But from that point on, of course, you could have held on and had break even, especially with such a good entry. Truth is, I thought it was going to reverse here. As I told you guys, I was looking for London highs. So I was looking at lower for higher. And let me just get this on the right spot. I was looking for London highs right here, and I was looking for lower for higher. So as soon as this level got taken off, I started looking for longs. Now, we didn't have an entry opportunity here. We started getting some here, but after all of this high resistance movement, I saw that price was just having a hard time going up, especially with this 10 a.m. open being all wonky. And if you see here, even if you're looking for a long from this breaker block, which is the first bullish breaker to form, right? So you wouldn't look for a long before then because you didn't have a bullish breaker. Well, you don't even have an inefficiency to enter on except all the way down here, right? This inversion fair value gap has been invalidated. This one too. Why? Because it closed through both sides. And then you have this inversion fair value gap here, which we're already traded into, and this fair value gap right here that is left. So you'd wait for this fair value gap. But is this a unicorn? No. And if just the fact that we don't expand through here, see the wicks we formed at this level, this just takes away all my confidence. So definitely just being able to spot these things so that you can wait. And when I say wait, when are you waiting for? What are you waiting for? Well, the macro, right? We always talk about this. Late New York trades, right? Late New York session trades are always the same things. It is trading the 1050 to 1110 macro opposite of the move that just happened. It's bulls against profitable AM traders, and you had a textbook set up there. You're right here. Do you have SMT? You have plenty, right? But the most obvious, at least in my book, was it this one right here? Yes. Just looking at 2 prominent swing points, right? Just 2 that are that appear right away, right? The closest ones. You have SMT. Anyways, we don't need SMT as a specific place, just SMT to be present. You have your breaker block right here. Why are you trading this breaker? Oh, Ollie, this seems cherry-picked, right? Why not trade this bullish breaker? Why not trade this one? This is what I mean. You have to be able to notice these things. The truth is, you had an entry here. Even if you were looking to trade this breaker, well, see, you would have had a loss. So let's actually consider that you try trading before the macro. Because as we say, right, I like being pessimistic. Of course, your objective would be all the way up here and then looking at London highs. At least that's what I was going to be looking for. I just stopped trading early when I saw this consolidation. But now you're in your macro right here. I really do. I make all of these beautiful templates and I just never use them. I really need to get used to that. As soon as this breaker forms, once we trade above here, right? We talked about this quite at length in the past 2 days. It's pretty much been a breaker class week in these PA reviews. You're looking at this next candle over. You're just waiting. The first fair value gap or inversion fair value gap to retrace into is this one. And then you have, this is not yet inverted, actually. I'm looking for my 3 PDR array stop loss, right? This is not yet inverted. So you have fair value gap, and order block, which brings your swing, your stop loss all the way down here. Now, looking at this, where would my partial be? Well, 5-minute chart. We're going to go here. We're going to look at the most recent expansion range. Now, why will I use my premium and discount in this case from here to here instead of here to here? You could tell me, well, look, this is a down move. Yes, but I always tell people to just draw over, right? If I try and draw over it in my 5-minute chart, the move I see is, okay, well, we went down here, we went up here, we went hit this. Okay, but what if I focus on the big picture? Well, this is clearly a move down. This swing is important. Why? Because it lasted long. Same thing here. Same thing here. Same thing here. Same thing here. Now here, there's a little bullshit, but at the end of the day, it's for that move. This is the symmetry of the charts. This is what I mean when I tell people focus on the symmetry. These are the moves. You can clearly tell with hindsight, right? This low lasted a while. It was an important low. This high as well. This low as well. It got targeted after, of course. This one can be, you can say yes or no, but this one clearly is. So this is a down expansion. This is a retracement, down expansion, retracement, down expansion. Now, if I'm trading the next retracement, or you could frame a reversal here. As I said, I was looking for London highs, so I was framing a reversal, which I was wrong, but you could have still made money looking for a partial. Then I'm going to focus on the latest expansion, which is the terminology I always use, which is this one. I like to explain myself in these cases. And now your partial, by the way, would be the first premium in efficiency, which in this case is the 5-minute order block right here. As I said, I like to explain myself in these cases because when people see hindsight chart, it's very hard for them to understand how would I use it, right, for you guys. So, okay, well, now he can analyze the charts in this way and whatnot, but how do I use it live? Which is why I like to explain in depth the rule-based approach so that when you're live on your chart, it's still the same thing. Same exact thing. Now, this partial just being at 1.14R is not the best, right? This is quite a large stop for this move. It really could be at this low right here. No need to allow for all that wick. But once again, mechanical approach, I don't get to choose. Taking partials at 1R, and then, for example, if I'd be taking half my position here, I'd be taking home 0.5R, which is less than a loss. So clearly, this is never happening. I will never take profit there. A full 50%. This is where adjustable risk comes in. So for example, if I'm in 3 contracts here, I'll take one off here, and then I'll look for the nearest level after, which again seems textbook, but now would be this high. Look to partial at this high. So I would just split my partial into 2. So now instead of take profiting 50% here, I'm take profiting a quarter, so 25%, and another quarter here to really give me that average of, okay, well, look, it's kind of like if I took profit at 1.5R. And then, of course, in this move, would have gotten stopped out, break even, but you still had plenty of opportunity. I skipped very quickly over it, but you also had an entry here just in general for another short opportunity, right? Truth is, for me, right, we're going to mark out this low, which is current low of day, right? So a very clear objective of sell side liquidity, right? But what if you didn't take this first entry? So now I'm just going to backtrack here because I do notice that I forgot to mention it. The real entry was this. Now, this is not something that is easy to notice because you're basically getting ready. You're open for trading, right? So you're allowed to take positions starting 9:30, and then 9:31 in 10 seconds, it's like you should be in a trade. Sometimes that's very fast-paced. I notice that in beginners most often, that 9:30 open, seeing it move quite a bit, just puts them off their game right up until that 9:50 mark. That's why it's good to wait till the 9:50 macro. Just makes things easier for beginners. But what if you're looking for a trade? Well, this might be a valid unicorn, but is it fair to say that this range or the bigger range, right? Same thing right here. I'll just use a bigger range to have better deviations here in this case. Is it fair to say, or you know what? Let's just keep the rules mechanical. Keep the simple ones. And also, as you can see, it actually looks better. But looking at this, is it fair to say that this is a breaker block as soon as we trade above and then trade back down below, which of course is the partial of the first position? Oh, I clicked on space. Sorry, guys. But yes, right? It formed a range, broke the highs, then broke the lows. So the last down close candle in this range, which is this one, let me mark it out, is a breaker block, which means that from this point on, I can look at inefficiencies like this inversion fair value gap right here, or even if we are, let's be even more pessimistic, let's just say this fair value gap. Right? And I'll use a box for this one because I'm starting to have lines everywhere. I'm going to try and get better at these things, just keeping my charts clean, because I noticed there's a lot of drawing on there recently. Let me just actually remove these. We already talked about this. Let's keep this. So this fair value gap at this point is your entry. So is this a valid Rise model entry? Yes, it is, just not the first one. And I always tell my students, like, if you miss the setup, don't try and chase it, because you're always going to end up hurting. And see, in this case, the entry is after my take profit of the first setup. So is this a good trade? Not necessarily. Is it a bad trade? Neither. It is an A setup. I like to focus on A+, but I'm also allowed to trade A setups. In this case, your 3 PD array stop loss rule, let's actually see if it would have stopped you out. So here you have your first PD array, of course, your entry. Then you have an inversion fair value gap right here, right? That has not been invalidated. Yes. So that is your second. And now we're looking for a third. Once again, I'm basically looking at all of the horizontal, just looking for a PD array. And it is this inversion fair value gap right here. So you would have gotten stopped out on this move, actually, because your stop would have been right here. And that's, a 30-point stop, fair enough. Are you really going to place your stop here when your actual objective has already been met here? And then perhaps you're looking at midnight. That this purple is midnight opening price right here. That aligns with 2 and 2.5. That's a great partial. Then your final target being under 2R. I'll never allow that. And your 3-PD array stop loss rule tells you your stop loss is right here. So definitely just overall, not the nicest setup. Why? Because you were late, right? If you didn't short early, you're way better off on waiting until that 10:50 to 11:10 macro, or sometimes just a 10 a.m. reversal to trade a retracement of that move. Is it still a good opportunity? Yes, it is way better to just wait and trade the opposite move than to try and chase the down move. Or even if it's an up move, right? If price runs at 9:30 and you weren't positioned early, then you lost your opportunity, and that's okay. Just wait for a retracement in the opposite direction that will either give you an opportunity to short again, as we have seen, or you can trade the up move and be quite happy with those results. Just in general, you're better off just waiting than chasing. Just overall, that is true for most things in life. Just wait for another opportunity to come. There will always be more opportunity. Not necessarily today, not necessarily tomorrow, but there will always be more. Do we have any questions about this? We can look at the PM session as well. I'm not going to lie to you guys. I didn't even look at it at all. There was actually a pretty nice opportunity here after returning to midnight open. That gives you a mitigation level. It makes sense with 4-hour power of 3. Once again, I don't like trading the PM session. Like, what? Am I going to be here at 1:30, look at price run without me, and then do all this up move? Am I really going to trade this? No fucking way. After this AM session. And then am I really going to have waited for 2 hours and a half, an hour and a half, sorry, just to trade this down move, which is a great move, don't get me wrong, but this just added 2.5 hours to my trading, to my chart time today. And that's not something I'm looking for. I'm not trading to make infinite money. I'm trading to buy my time. That is the truth. I don't want to be spending 8 hours in front of a chart. I want to be spending 1.5 to 2 hours being a specialist. And see, this morning I was done in like 30 minutes. These past 3 days, I just look at the time and it's like 10:15 and I'm like, what the fuck? Okay, I'm gone. This is what makes me comfortable as a trader. Now, every trader is different, but that's definitely what I like. I'm not seeing any questions. I'm going to give you guys another chance, but if it's all good, it's all good, right? Hopefully these are insightful. How I see it is that if I see a lot of people coming back, then what I'm saying here must be worth something, right? But I'm always open to suggestions to improve these peer reviews, improve these events for you guys, right? I do this for you. So if there's anything you want us to run over, maybe once a week you'd like us to talk a little more about statistics. Maybe once a week you'd like us to showcase some different concepts, right? Just things like this, I'm definitely open to them. But these are not stuff I'm going to organize unless someone requests it from me, unless someone wants to see that, right? Because I want to have something, I want to make these calls and actually have them be useful for the people in our community. So definitely let me know if you guys have any questions on that end, or not any questions, sorry, any suggestions or requests on that end. But for today, that's going to be all. As I said, I'm not going to be trading tomorrow. I like to trade retracements on Friday, and when Thursday retraces, Friday is oftentimes just expansion and then just some weirdness afterwards, right? But you can get some very clean moves Friday AM. So good luck if you're trading tomorrow. If not, we're going to see each other back on Sunday. I'll still be in Discord tomorrow sending some charts probably. But you guys have a great night, and once again, good luck trading tomorrow. Bye, guys.